on that. Um, so I never know what's going to happen with the recording, so I do my best. Well, thank you all for joining me today. Um, this is a different type of a video program, a webinar that I've done in the past, and I just give you a few seconds to know where it came from. Um, I love trading. Well, if I call what I do trading, it's probably more investing. Um, but it's short-term investing or active trading. It's somewhere where those two meet in the middle. And I'm always sitting on a plane and I'm either reading or looking at stock charts, and I travel well, it seems like almost every day for my day job. And somebody asked me, what am I doing and where did I learn all this? And it was funny, I was sitting with the Market MRI Pro tool and I was showing them the different parts. And I noticed there was a theme. And the theme was, but that person's dead, but that person's gone, this person's not with us anymore. And it made me realize how many people that mentored me, that influenced me and influenced how I trade, that aren't here anymore. And I thought, how do I honor some of those people? And the one that's probably the biggest influence on a lot of things, not just my trading, was Ian. And so I thought, let's use Memorial Day, which I think the intent is, you know, remembering those that gave their lives for the country and all those things. I'm not trying to um, say anything that's bad. That's the right thing to do. But I think it's also a day you can think about others. And so today I'm going to think a little bit about Ian and some of the others that we lost. And when I started thinking just over the last, who are the last six people that passed that were big influence, it was pretty amazing the people that showed up there. So I think I know every name here, but this is Jeffrey Scott. And I have my older emails, hdsidoc@gmail.com. That works. MarketMRIPro@gmail.com is kind of the one I'm using today. It might ultimately be less confusing as I talk more in the future about the Market MRI Pro tool that I developed. And then most of you are probably part of the Google group, but if you're not, I have this group. It's called Top Down Trader. It's a low-key group, but I use it to push things. And I do a video almost every night. 80% I'll stick on YouTube. Sometimes I just don't want to do that, or I don't have the time, and I'll stick them just on the top down group. If you buy my tools, you get an extra $100 off if you're in that group on whatever purchase you make. So, and the main reason I did it was I kept a mailing list of about 20 people, and some of those were family members. And every time I'd send something out, I'd get 8 spam things returned to me. So this is a way to avoid being spammed. I've tried Discord in the past, and frankly, I just work too much during the day to manage a Discord group. I'm getting close to that point where my wife's going to force me to retire. And when that happens, I'll probably go back to Discord or something else for more active interaction. But today, it's not about me, it's about the others. Now, obviously, we're going to talk about finding stocks and stuff. So the disclaimer, I mean, everything we're going to talk about today is for educational purposes only. Anything I recommend should be taken in the spirit of education, not investment advice. Um, all the things that I do is top down, and I learned it from Ian. So there's no different today than the other things, except I'll be using more than just my tool. Trading involves risk, and you alone are solely responsible for any decisions you make. I may own or intend to buy or sell any stock mentioned. If I look at stocks, trading stocks and options should be considered risky. You should always consult with your financial advisor. And I've got tools in multiple platforms, but frankly, everything started with HDSI, and that's what we're going to talk about. Now, I remember twice a year Ian would have his meeting in Palos Verdes, um, and those were some of my happiest weekends. My wife would think it's because I was away from her and the kids because they were small back then. But no, I just loved interacting with Ian and the others in the room. And I mean, there were great people in the room. I mean, you think about Robert Minkowski, how smart he was. Um, Fred Richards, who came across as a country farmer who turned out to have his advanced degrees from Harvard and measured his farms by percentage of land in the states, not by acres. Just great people in the room. I learned from so many people, built great friendships. Bob, who's here, Manu, Gallardi, and others. Um, those were great days. Unfortunately, we lost Ian a number of years ago. This meeting is actually not about Ian, the Orange County meeting. It was George Lee's meeting. He's one of the others that I'll talk about. And we have this every year. It is intentionally a low budget meeting. Why? George was cheap. George would actually have meetings in his hotel room and use a wall. I won't do that. But this is Greg Mills keeps it going. It's at the Residence Inn and Suites in Tustin. I know some of you will be there. It is in a little bit less than 2 weeks, $400, 5 speakers, 3 days of education. We have 20 people in the room, and the rest are online. There's still online slots available. I always love how when people say they're limited, it's hard to believe that they're limited. They're not online. The room is limited just because of space. I've tried to take a different approach this year, and for alternative or additional speakers, it's always going to be Chris coming in from London and myself. But this year I tried to go big. And I've got 3 speakers, each of which have much larger followings than I do. And frankly, I was surprised that they all agree, except for maybe John Person, because he's my buddy down here in South Florida. But John is a real trader. He's owned a brokerage. He's done all different time frames. He manages money. He's got great indicators in Thinkorswim and other platforms, and soon to be in Market MRI Pro. Dan Fitzpatrick, I've always called, before we heard about Copilot for Microsoft Windows, I always looked at Dan as my Copilot. And what I mean by that was I have my own style of trading. He has his own style. And I never listen to anybody else before I do my videos. I don't want to be colored by my thoughts. But after I'm done with my videos, I usually play his strategy session. And why? Because they're pretty similar to what I put out there. And, it kind of validates. It's like my co-pilot in the plane, making sure that I'm not making a mistake. And then Matt Caruso is a young guy. He lives in, I think, he's in Canadian, maybe he's in Montreal. I can't remember exactly. And you have these U.S. investing championships, and you see these people with these massive 100% returns. And some of them are really good teachers, some of them are not. Matt's a pretty good teacher, and I actually took his education course, and I subscribed to his service. So I got 3 people who I actually have paid money to over the years, who I think are much better speakers and much more smarter than I am. And I think they're going to add to the meeting. So I hope if you haven't signed up, something you might consider. These are super high-end speakers that we're bringing. Not that we haven't brought high-end before, but I wanted to go outside our core. I mentioned my Google group. It's called Top Down Trader. All you have to do is go to Google Groups, put in your Google ID, search for Top Down Trader, and let me know how you want to be notified. I want it digest, which is once a day. I want the emails. If you take the emails, I encourage interaction on the board, which means you might get 3, 4, 5 emails a day on a busy day. And if you don't want that, just do the digest. And then let's talk about some of those people that came to mind. And again, it came out of, I just noticed this theme. Well, we lost O'Neill in the past year. And I never had the pleasure of working for him like so many of the people who I listened to did. But since I am a healthcare guy, probably wouldn't have made sense to go work for O'Neill. But the guy was brilliant. And I loved his style of trading. And this How to Make Money in Stocks book is, to me, is a filter. And because so many people that are casual acquaintances, friends, people I work with, say to me, can you teach me how to trade? Can you teach me how to trade? Can you show me how you make money in the markets? And I filter them by saying, you go read this book, and when you come back after you've read the book, I'll even pay for it on your Kindle. Then I'll quiz you, and if you really read the book, I'll help you. And the sad part is that filters out 90% of the people. I read that book every year because I always pick out a nugget. Again, we're going to talk a lot about Ian. For those that didn't know Ian, what a jolly guy. Um, English, moved to the States, worked for Xerox, and he would tell the story how when he retired, he had all of his money was in Xerox stock, and he even put his son to work for Xerox. And somebody told him that he needed to diversify and he needed to learn what he did. And then he talked about how he used to listen to O'Neill. And, he was, Ian's an engineering mind, a brilliant mind, tested things. And I think he improved on a lot of things in canceling. And HGSI, the software program, happened because how I got to meet Ian as well. There used to be a company called Telescan, not Telecharts Warden, but Telescan. And it was before we had what we know today as the internet. So you sign in AutoNet or something like that. And it was basically a finance bulletin board with charting and scanning. They had this incredible thing called, I think it was called ProSearch, where it would be backwards of what you think of searching. Let's say that you thought today looked like 2003, and I'm making that up, and you took a list of what the best stocks were in 2003 and said could tell it, build me a scan that would have found these stocks in 2003, and then run that scan against today's stocks and tell me what's working. So I met him briefly when I was at a meeting in Houston where he was one of the outside speakers. And then he came to Atlanta where I used to live and he gave a program. And that was, I mean, if you can fall in love with a guy in a whatever way, but just in the way he spoke and the intelligence that emanated from him and his style, I became totally sold on Ian and I became a major follower. And I learned so much from him. Miss him. And I mean, unfortunately, Ian taught us in the day before we Zoomed. And the nice thing about Zoom is you archive. I've got a couple of video presentations that somebody in the audience would have videoed during his program. Um, they're not perfect. The audio's not great, but I was listening to a couple last night getting ready for today. And the funny thing is I wrote down a bunch of things on a notepad of, you know what, I need to go back and think about this. Maybe I need to incorporate this into what I do. Still finding nuggets, a decade or so after he died. George Lee is the next one. George was a humble guy, amazing trader, and he loved to make you feel bad from the podium. How many people have had a 10 bagger, a 30 bagger, and why didn't you buy the stock I told you to buy? But was a great guy, and he didn't intend to make us feel bad. I think it was his way of getting people to wake up and realize that there's a lot of ways to make money in the market, and he was showing them. And George Kaloops, Canada, on the west side of Canada, superstar. And I met him, I think he started with the Best Choice meeting, and then somehow I ended up in the Orange County meeting as a attendee. And then next thing I know, I was speaking there, and George passed a few years back, and you know, I got Greg to continue the meetings. I took over, could never replace George, but I took over his role as sort of the head person, and we've tried to keep it alive and we keep it cheap in his vein. Steve Bigelow in the lower left, this guy, um, and the sad thing is, when some of these go, people die, their stuff disappears. Now, Steve sold his wife or estate, sold his website and his IP to Metastack, so that won't disappear. But Steve was him, and then you have Nissen, were really the two big candlestick guys. And one of the cool things about Bigelow was how he would do these, and the same thing with the next guy, almost 3 times a week would do these free videos talking about the markets. And he used a weird platform, but who cares? He was just looking at charts. Very simple charts, candlesticks, volume, maybe stochastics or MACD, and none of the fancy, funny named indicators that we'll talk about today. And he just was another great teacher that really talked about what you see, how you look at things, and trades like me, daily and weekly charts. I don't need intraday charts. David Elliott. Um, this one was interesting how I met him. Because of my day job, I'm on the road constantly, and I'm either going to medical meetings to speak, I'm going to listen and learn, and sometimes I'm going to pharma and biotech to sell. Um, and one of the companies that I sell to used to be Genentech. Now it's called Roche. I sell to them, and they're in San Francisco. And I think I was staying at the Airport Embassy Suites, and actually I think it was the Hyatt. And I walked in, and there was a sign tonight, lecture, David Elliott, everyone welcome, free. So I said, what the heck? I gave up my room service to go to a meeting. And typically that's what I do when I'm on the road. I don't do much. I just do my job. And I listened to this guy speak for 3 hours, and I was sold. And Mobo breakouts, um, SOAP, map indicators, a lot of things that are built into Thinkorswim, things that my buddy George used to do, came from David Elliott. Um, and he succumbed a few years ago, I think, to colon, I believe it was colon cancer. And I was really upset because he did a trading cruise. And I've done it a couple times with John Person. And I really wanted to go, and I couldn't go on that cruise, and that was the end of him. And like Bigelow, he would speak for hours, several times a week, about the markets. I can actually understand that because if you think about all the videos and stuff I do, and I do them because I like doing them, I'm not charging and things like that. I get it. He just had a wife that was more forgiving than mine because she doesn't get it. But that's okay. And then Mark Douglas. You know, your mind matters so much. And, you know, even if you don't study those aspects of trading, sometimes you learn by hard knocks. I mean, Van Tharp was another one I could have put up here. He passed away a few years back. Really big on money management, stop placement, etc. But you know, there's certain things that you'll find out in the School of Hard Knocks. One, if you're not feeling good physically, you're not going to do well in the markets. I mean, it does impact, and I've noticed that when I've had some, modest illnesses that resolved. If you're having stress in your marriage, work, and your mind can't be where in the markets, don't trade. Cash is a position. So I learned a long time ago there's this huge relationship between my mental health at the given time and my performance. And then the other thing I wish, and I got to talk to Praveen, I want a way to de-identify stocks. It kills me. I just have a hard time buying restaurants. And then there's certain things that I've bought that I've lost money on 3 times in a row, and I just can't buy them. Then, of course, the fourth time it goes crazy. And these are things you learn through Mark and others how to overcome them. I just want to have de-identify the names so I don't have any connotations. Corcept for example, is a biotech, and it showed up on my screens all the time as an $8, $10, $12 stock. But I know what their science is, and it's boring. It's not sexy. Yet, so I couldn't buy it. I think the stock's 70 or 80 bucks now. So sometimes I'd be better off not knowing the names. Again, the psychotherapy and the psychology of trading is a big deal, and it certainly can impact on your performance. So let's talk about, I tried to limit it to 10. I couldn't. And I could have probably gone to 10 more things. But these are the things that I want to go through over the next hour or so of my favorite Ian teachings and things that influence me today and everything I do. And some like the three road scenario, influenced me way beyond my trading. So we're going to look at top-down investing, why. And again, I'm not going deep in any of these or we'd be here to Thursday. I'm going to talk about the E-index for determining the market top, something that I might spend the rest of today building my E-index for today. Boxes at the bottoms. I mean, George and I used to kid each other about this. They really work at the bottoms. They don't work at the top, and so you know George or the box is working this month. I go, it doesn't really matter because you need a low. Well, we had a low on April 7th, and I ran my boxes and I created a high value list of stocks to buy from, and I'll show you how boxes did off that bottom. Something that probably hardly anybody uses today unless they came from those Ian meetings is the group inclusion filter in HGSI and combining that with smart groups. I still do that. I'm going to show you. Ian resuscitated the Hindenburg Omen. Old wives' tale, no one believes it. It works. It works every frickin' time. Why people don't believe it, I don't know. The challenge is it doesn't mean it's happening tomorrow. We'll talk about a Hindenburg and what it tells you about what's coming. Percent B and three bucket skipping. I don't usually talk about three bucket skipping explicitly. I'll mention that today. But percent B has to do with Bollinger Bands. And I think what Ian taught us about Bollinger Bands, whether from a stock impulse of something happening to a market changing to the buckets that we use, he did more with percent B than probably John did, John Bollinger. Bingo, bongo, bango, a series of indicators with the Eureka and Phoenix that sort of go through the market cycle and tell you where you're at. Gas in the tank, it's one of my favorite scans. I like to project where I think a stock's price is going. And I personally believe that over the next decade, so long term, the thing that will determine stock price is going to be earnings and earnings growth. And that short term, no. Short term is I beat earnings. Big surprise. Well, even my earnings sucked. I'm probably going up. Short term, it's about stories. It's about a new drug was discovered. But long term, it's about earnings. And it's what am I paying for a percentage of those earnings. And gas in the tank is a scan within HGSI that allows me to find stocks with great earnings growth. The three road scenario, that's the one that applies to everything I do in my day job. You got to go into a sales meeting, into an operations meeting, into looking at a stock market or looking at a stock, and you got to figure three things are going to happen. It's going up, it's going down, or it's going to stay the same. And how do you address differently each of those scenarios? And then the high jump bar. Everybody talks about, I can't buy this, it's extended. Well, what does that even mean? Show me the math. So those are some of the favorite things that I learned from Ian, and I'm going to review them over again as we go forward today. Start with top-down investing. This is something that it's in my disclaimer. That's what I do, top-down analysis. Why? And just a couple other comments. Ian gave, at one point, my son, who is a prolific writer, and I'm going to see him and I'm going to remind him again, spent a weekend with Ian and was going to write Ian's story. And I need to beat my son up to get him to do it because Ian's got a story that it's really sad because it'll die out with my generation. And he needs a book. But Ian did give me permission to use the slides. Whenever you see Ian's shield, it's an Ian slide. So I'm not British. We didn't play snakes and ladders. We played chutes and ladders. But it's, the whole point of chutes and ladders is that you want to go from 1 to 100. You win at 100. When you think about where you are financially, there are ways to get to 100. I've been very fortunate. I was a horrible saver when I practiced medicine. I'll be the first to admit that, and so are a lot of my peers. When I quit medicine, I've been involved now in 5 exits. The largest exit was $670 million of companies that I've started. So I got to 100. And investing for me is it's my Sudoku. It keeps my mind sharp. But I want to get back. I mean, this is why I do what I do. This is why I do everything I do for free on all these online videos. And I like the feeling of doing well picking stocks. Um, so you can get to 100 because your family leaves you a big inheritance. I wasn't that lucky. You can get lucky in work and make a lot of money. I wasn't in baseball or basketball or hockey player with a big salary, or you can create value and sell it, which is what I did to get to 100. And the old-fashioned way is to save money, and the best way I think, to make money long term is the stock market because it can really accelerate those savings. So can this game. So the game is you go from 1 to 100. And you go and you hit on number 28, and it's like, this is awesome. I just accelerated all to 84. And that's what it's all about. I mean, you got a really big bull market. Think of 2009, March 9th. Think of late March 2023, where the markets bottomed and we had this massive rallies. Well, that was that ladder to hog heaven. And then you roll the dice, you get a 3, and it's like, oh God, it's 2020 all over again, right back down to 24. I played that game for a decade. And and finally I started paying attention and looked at what Ian was teaching and looked at better money management. I don't play that game anymore. Um, but that's a game that a lot of people play. Capital preservation has to be your goal. You had to have money left on April 7th of 2025 to go back into the market. And if you just kept everything and held, you would have nothing left to benefit from a market turn. Why tops down? You've all been to my presentations before, so I don't need to belabor it, but I am going to post this in a few places and just to talk through it for a second. Ian used to hold a meeting at the library in Palos Verdes Estates, lovely library. They're so good to us. And I got to go live a couple times. Unfortunately, as I mentioned, pre-Zoom, or else we would have been on every one of them. And you'd have really smart people in that room, Mike Scott, others, and they would pick the best stocks right then and there. They're high growth stock investors. And you can't really prospectively say what kind of market you're in. That's a retrospective. So somebody kept records and then they look back and they divided markets up into 4 types. And then they looked at 20-day return, think 1 month. They looked at 40-day return, think 2 months. And they saw that in a strong market, good stock pickers could double their value in a month's time. Wow, those markets are great. And I gave a couple of dates when we saw those. And in a weak market, even really good stock pickers don't do very well. So that's the first message. The market matters. The second thing is when you get a big gain, look what happens the second month. You give money back. There's always a reversion to the mean. So what does that say to me? It says to me, take profits. So my money management program has a target. That target is a factor of the risk, the R that I'm taking, in a market that is choppy, 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 and I'm not feeling it. It might be 1 to 1. I may take off half my position when I get a 1R. In a big bullish market, I might have my R at 2 or 3, my R factor. So I might wait till I'm twice or 3 times what the risk is before I take profits. I learned the hard way, this really does happen. So I always like to take profits and put it in the bank. The other message here is, especially in a horrible market, it doesn't revert quick enough. You can just keep losing. So I think this is a really important slide. These are Ian's comments, and I agree it's one of the most important charts in the whole presentation. So market's going to be 50% Industry groups 20 to 30. So even if you're the world's greatest stock picker, it's 20 to 30. Now, I'm sure you all know what the futures are. And don't you just hate it when it's a Monday holiday and you wake up in the morning and you see this is just, whoops, sorry about that. Let me hit that button again. This is just TradeStation. But you wake up Monday morning and you see 67 on the E-minis, 200 are the ESs, 290 up on the NASDAQ, 419 on the Dow, 20 on the Russell, and 975 on Bitcoin, and the markets are closed. So we got this great open today, and on the futures, and we'll see what they are tomorrow. And we all know why. We're stuck in this crazy news environment where Trump tweeted that he's giving an extension to Europe before he imposes higher tariffs. Markets rally. This is a tough one. And if you don't believe this first point, just think about the days you make money. You make money on those days that Trump comes out and says something the market likes. If there's bad news, a bad CPI, PCE, Nvidia is going to take a big charge. These are all things that have recently happened. The market's going down, and so is your portfolio. So I let the market determine my stance. I look for my favorite setups in the top industries. Bottoms up is when you feel cocky and you ignore the market and you just look for the best stocks or worst stocks for shorting and long. And then I use different tools to gauge what's working. The majority I've learned from Ian. So in HGSI, and I could go show you this. What the heck? I'm going to show it to you. I mean, a lot of people, have noticed, well, hey, Jeff, you're doing something different today. Are you still using HGSI? Of course I'm still using HGSI. Why would I stop using HGSI? I mean, I love HGSI. I think it is, if not the most, and this is as somebody who has something he could sell you. If it's not the most popular product in the market, it's damn close. The problem with HGSI is the user interface and the learning curve. I've been using HGSI since it came out. I have no issue with the user interface or learning curve, but I've tried to teach a lot of people how to use it, and it's been a challenge because of the learning curve. So what I start with, and I do this every day, even though I've got my own tools, okay, I still use HGSI. One of the first things that I do is I go into market analysis folders, major markets, which is a list of a lot of ETFs, including the indices, ARC, IBD 50, oil, gas. I put them in the top-down analysis. I run my raw count, and I could see what was leading: utilities, commodities, space, bonds. Actually, we're leading on, actually, I go to the top here. Sorry about that. Gold, silver, short the volatility, robots, oil, dollar bearish. So these are all weak dollar plays. It gives me a sense of what's working. I can flip down the bottom. I can see small caps weren't working. Dollar bulls, Russell 2000, S&P 100, S&P 500 are some of the weakest things in the market right now. That gives me great insight. And then because I'm lazy and I don't want to be flipping through, I just alphabetize it, and I usually will start and I'll look at the S&P, and I could see this is already here in the S&P, I think, so you can see it's pulled into the 200. Up here are Hindenburg-Omen signals. If you go and try and duplicate it, you're going to get mad at me and say, I don't see the same thing. Well, that's because I cheat. Or no, I would say it's because I know the program. When you put the Hindi in your chart in HDSI, you have two versions. You have all NYSE index, and you have the other choice, which is bar chart. For whatever reason, up until about 210, and I don't remember which one is which, one of them worked, and since then the other one works better for finding the Hindenburg. So I have the Hindenburg on every one of my charts. I have a high jump on my charts. I have Phoenixes and Eurekas and Kahunas on my charts, all the things that I like to look at. We're going to talk about many of those today. So I could go through all the ETFs. This is the one that's the most optimistic to me because if we pulled into the 200, it's the right place to bounce. And since it's an open candle, it means it closed higher than it opened. We may have bounced on that on Friday. That's the optimistic one. All right. They're not all optimistic. The Dow, on the other hand, which we know is just 30 stocks, we shouldn't be that excited by it. The dollar broke through that 200, and now will it get back above with a strong day on Tuesday? Maybe. And then you got the Qs, which have been strong. So here's the NASDAQ 100. Qs are way above that 200. This is probably the strongest, and they're all in a little bit of a flag. That's okay. That doesn't bother me. And then another weak sister has, and it's not meant to be sexist, um, is the Russell 2000, which has never gotten to the 200. So I look at these every day. I'll probably be looking at them in Market MRI Pro as well. But I'll show you the part that that really helps me on a daily basis. And I'm going to show you a couple of different things in HTSI that do that. There's this group here called industries. If I hit warehouse, it moves them over here. And I'm going to change this. And well, first I'll start by telling you in HTSI there's 175 industry groups. And under each industry group, if I right click, change to index or industry group, you're going to see the stocks in that industry group. And they're ranked by whatever ranking tool you're using. So what I like to do on the industry groups is I only want to find the ones, if I'm bullish, that have 2-day momentum going up. So I have 2-day force up. This picks, I make sure I'm ranking them by the raw combo. And these are ranking by industry strength. So I will pretty much every day come in here, right click, go to index group, and we know uranium got a bump Friday because Trump had a tweet and then he had some comments. This is a cheap one. This is UEC breaking above the 200. This is a Kahuna. This is a John Person PPS buy. That's a Mobo breakout. That is a squeeze. And that is a Bible gap up. And this is a 5-bagger. It's got all the things in it you want. It's just a dinky little company. And I might go through, and I would, and I'll look at, here's Cameco. This is the leader of the group, I believe. I look up here, it's getting extended. Somewhere down here, I should see the high jump. It says 95%, 94.6. Great earnings per share growth. To me, that's one of the things I always liked about HTSI. It's giving me the current and next quarter estimates on earnings. This is gas in the tank. Why? Because we're looking at plus 130, plus 2600. Yeah, this was an 1100 here, and then it was minus 104. It's 10 cents versus 23. That's a big increase in real earnings. And I like this one. That's on one of my shortlist stocks. Energy Fuels is another one. Similar to the first one, a cheap stock, although this one has a little bit more revenue. And you can go through the list. Here's a copper stock, Freeport-McMoRan, still below the 200. And then I get to the index. I'm only interested in which of these stocks are actually better than the index. So I will do what I just did on the top 10 industry groups pretty much every night, just looking to see things. And again, it's just a similar but different way than using Market MRI Pro. I like to use 2 different tools and hopefully end up with the same answers. So looking at the markets from a top down and then to the industry groups to the stocks, to me is just one of the superstars of what HTSI does. And as you can see, I just ran through that exact analysis right here, although this is supposed to be the stocks. I'll fix that before I post it. Any questions about why top-down analysis? And you can type things into the chat box. It's good to know people are still awake and still alive. Anyways, don't need to add any more pictures to the program. But if you have any questions or comments as I go, and a lot of this is review, and it's all review. And for some of you, it's probably going back into things that you thought about or looked at a long time ago. Let's talk about the E-index. And one of the things that I got to do at the Ian meetings is that I basically come prepared with a list of 30 or 40 leaders. And leaders are what we call lower left to upper right. It means when you're looking at a chart, they start low on the left and they're high on the right, meaning that they had a big uptrend during that chart. And I'd come up to the front and I'd go through chart after chart after chart. And Ian would ask the question, tight or loose? Tight means that it's not chopping all over the place. It means it's almost a straight line. Those are the best. You don't see that many, but those are the best. And so we would try and find the stocks that were tight stocks that were lower left to upper right. And that was what we called the E index. So what did we do? We would build a list of the strongest stocks in the market, no more than 2 stocks per industry. We try and have 15 to 25 stocks that are the leaders at a given point. And the hypothesis that he proved over and over again is when the markets get extended, the E index usually will roll over first, giving us a clue to protect positions and consider getting out of the market. And the other thing that we learned, and I think it's also very important, is stocks that led the last leg, the leaders, will not necessarily lead the next leg. So I built a leaders index on November 24th, and I thought it was late because it was back over here. And I would often post it in the top-down trader group, and I was willing to let it run until it broke and stayed broke on the 50-day moving average. So technically it broke down very quickly in the second week of December, but it really didn't break down until right here. And the goal is to find time, when this broke down, recognizing the market's probably going to break down thereafter, it gives you a clue. So it's a early warning signal to give you a sense of when the market at a whole is at risk of falling. Now, in HDSI, one of the things that's really powerful is you can create an index of any list of stocks. And it pretty much happens automatically. You start a new folder, you call it Leaders Index, you type in a list of stocks, and when you hit OK to create that group, it asks you, do you want to create a filter? Yeah, of course you do. And make sure up here you don't have something that says no filters. But that filter is what I plot. And so I use that leaders index, to give me a clue as to what the market was doing. Now, the funny thing was, the first meeting was in March, and every year, like March 25th. And that was a mixed bag, because it used to be you sell in May and go away, which hasn't been working real well lately. And at that meeting, I didn't go and buy the E index because the market didn't always feel so good. Although, as I already pointed out, we've had major lows in March before. But the October meeting is right when the market's juicy. And I think half of us were buying all the stocks in the E index before we got on our planes to go home, because it always went up for a while. But then it broke. And when it broke, it was a sign that the market was breaking as well. All right, any questions on the E index? All of you can create your own E index, and then I'll probably post mine, and then you look and see how yours compares both by components, but also you make your own index and you watch to see when it breaks down. The boxes. The key on the Ian boxes is when we get a confirmed uptrend, I will start to look for Ian box stocks. How did he convince me of this? Well, here are the boxes. And annual earnings, looking at the last 5 years. So the leaders are the leaders. When I rank the Industry groups, I rank them by 2-day force. I don't change that when the stocks come up, and that's to me a short-term momentum. In the Market MRI Pro, I combine that with with the Elder Force Index, and so it's a combination of its price volume, its uh, change from today versus yesterday, its direction. Um, so yes, so I do rank them looking at 2-day momentum, just answering a question. So appreciate the question. So the boxes are you create your own list of stocks and you put them in boxes. Current earnings rate growth. So this is quarter over quarter. It's not necessarily consecutive quarters. And this is the growth rate. This is annual. If you have 3 by 3, you got 9 boxes. He used to have a 10 box 10, which was at the time Gillette, Kellogg, things that didn't do much, paid a dividend. And then box 11 was cash. Now, it's a little bit easier to see that here. And it basically, you can build something, but you don't need to worry about that. I'm going to show you how to do it for you in the program. You can build it here. Here are the boxes by definition. Why did I think that boxes made sense? Because Ian's a genius. He talked about 92, 93, and that, it is in his own special accent. He'd be sitting there saying, yes, I had these lists, and I noticed when these stocks were breaking out, and he put them in the boxes, and between September 11th and February 12th, which was about 5 months, he noticed that the box 1 stocks were up 59%, box 7 stocks were up 47, box 5 were up 55. Remember those 3 boxes. Those were the 3 boxes that I thought that I like to watch. You double in 1 year because you have massive earnings rates. This one you double in 2 years. And then 7, which is stocks that stub their toes on the annual earnings but have great quarterly earnings, are turnaround stocks. And those have been my go-to boxes. So he showed us 92, 93. That was nice performance. He showed us 98, 99. These are returns between October 15th and January 22nd. 3 months in a week. The S&P I didn't put here, but the average of these stocks was up 67%. 94%, 102 in box 7, 70 in box 5. You could see box 2 and box 4 were also strong. Okay, that was a bottom. Another bottom, 9/1/2010. Looked at it April 29th. So now you're talking almost 8 months, a long time. Looked at only stocks with only ERG 255. ERG is EPS rank plus relative strength plus group rank. 255, everything 0 to 99. So those are strong stocks. And the program creates the slices for you. And in that period of time, the S&P was up 24%. That was a super strong market. But geez, box 7 was up 106 and box 1 was up 125. I think I will take the box stocks over the S&P 500. And you could see here all the boxes outperform the S&P 500. Not unusual. Here is June 23 of 2013. These were the stocks in the list. Here's how it said. The S&P was up 6.8%. And this was a weird one where you had led by box 4, 5, and 2. Box 7 was only up 12%. But hey, all of these are up more than the S&P, and the littlest one was up 50% more than the S&P. There's nothing wrong with that. All right, so did you check your boxes? This was my video. Whoa, come back. This is the video that I put out on April 7th. And first I said a bottom is in, and then I went back and I said, but who knows if it's the bottom. And I think that's fair because at some point we'll probably have some type of a retest. But you could see how we created the bottoms, the boxes, back on April 7th. And as of this weekend, box 1 is up 27%, and this is in 1 month and 5 days. Box 7 is up 29%. Box 5 is up 17.8, and the S&P is up 16%. So we've had a good move in a short period of time. I'd rather have 29 and 27 than 16%. All the boxes in combined, all the stocks were up 19.52. I think the boxes work. How do you make the boxes? I'll show you how you make the boxes like in 30 seconds. All right, so let me try and figure out what's the best way to flip. It's probably with HGSI. When I go back to it, it's not just one window, it's 4 windows I got to bring up. All right, so I'm going to go here to all securities. And I'm hit warehouse view, and that's going to dump them up here. And now I'm going to go into my view, and I'm going to search views, and I'm going to type in box. And boy, there's a lot of boxes. All right. Probably they're not all boxes. Here is one that I'm going to use. ERG 240 HGS box stocks. So when I click that and I put that into the warehouse, what we better see is, now let me find where my boxes are. Here's the box number. So every one of these stocks has a box. And remember I said ERG is EPS rank, relative strength. Let me move this over, and then group. Here are the ranks. A little bit further. And so EPS, relative strength group, and there's ERG. So now I've created a list here of 160 stocks. I go into the Magic Pie. I bring up HGS boxes, and it automatically put what stocks are in the various boxes for me. Now we're not at a bottom, so this one doesn't count. But what I could do is say, let's store those, and we're going to call that HGS box, no bottom, and today is what? 5.26.2025, and I'm going to hit OK, and I'm going to show you magic. I think it's magic, at least, because I'm going to come in here under user groups. All right, letting everything get done. I have a tendency, I don't like to wait. And somewhere, here it is, the boxes were created in HGSI with a list of stocks. All right, there's nothing else. I couldn't create this in a program. I wouldn't even try. It's just too much work. But there is a way to rapidly create your boxes and find the stocks that have a high likelihood of leading the market higher. And that was on the 13th. How about this weekend? So 10 more days. We can see box 7 is up 31%. Box 1 is up 27. Box 5 is up 19. The index average is 12.58, and the S&P is 14. So now we have doubled the performance of the S&P by finding the stocks in 1, 5, and 7. So boxes, smart groups, and group inclusion filters. Here's another, if I want to be obnoxious and play off of some of these marketing guys that sell everything. Here's a pro tip. Probably, if not, it's got to be, if not the best feature in HGSI, it is one of them. And I've already shown you some really good stuff in HGSI. So if you can't tell, I'm still a big fan of HGSI. I just needed to create something so that if I'm going to spend my time teaching people, they actually continue. And I needed something easier, and that's what we created, Market MRI Pro. So let me just make sure I got to close that window, because if I leave a window open, it's going to kill me. All right, what I want to show you now is a hidden secret in HGSI. How would you like to have a list of the best stocks in the market every time you go into, you run an update. Those are the smart groups. Here are the 5 smart groups that I follow. There are those that I don't follow. David Gallardi, Gil Morales, Ian, my own, John Person. Let's say right now we're bullish. And then I have a couple somewhere down. Let's see. You have user created smart groups, and then I have a couple in here that I uniformly follow. All right. Each one of these smart groups, and these are bullish ones, have a list of stocks in them. So you could make a hypothesis. If you look at various filtering and scans to find the leading best stocks in the market at a given point in time, there's a good chance that if a stock is in a lot of lists, it's a good stock. Let's check that out. So under tools, group inclusion report, you pop it open. It allows you to come in here and check off your boxes, the boxes that you're interested in. So I've checked off the boxes I'm interested in. It allows me to, let's look at everything that has more than 7 that are in, so everything has to be in at least 7 lists. This is tight. And I could change the name to 7. Let's go no more than 25 securities. Save report to a file. I'm going to hit OK. And we're going to call this, this is what I did yesterday, so we'll just keep calling it GIF bullish. Save. What? Oh, yes, just overwrite it. It's the same thing I did. And what it's going to do is a couple of things. It's going to open up, generate index. Over here, it has opened up 25 stocks and an index. It's under the user group as participation in 7 or more groups. Let's look at that index. I wish everybody's portfolio looked like this, don't you? Choppy time and now going to hog heaven. So this is good. It may not be as good as a leaders index, which is probably have a longer run. That's a good looking index. All right, so what we have here is we got those stocks. How many of these stocks do you own? These are, to me, the leading stocks in the market, and I own a bunch of them. You want to own the leaders. You want to own the leaders. Here it is showing you each of the stocks. This one was in 19 groups. Vistra Energy, GE Vernova. I hope Praveen still has some because we bought it together a lot far away ago. Microvast. I don't even know all these companies. But these are how many groups they're in and the stocks. No other program known to man that I've ever seen will do this for you. Okay? And let me show you the shortcut. And probably the thing that may be the best quick thing to do in HDSI. See where it says top 50? George does it for you. George being the proprietor of HDSI. Boom. Most recent. Do we have an index? I don't remember if we have an index. This probably not. Let's open it and see if we, won't let you do manipulation probably because it's fixed. These are the stocks that it found. And a lot of these are the same stocks. And this is updated every time you update HDSI. Talk about a hidden gem. All right. So I put that in here. And all right, Hindenburg Omen. Ian made it popular again. So remember, this is a strong warning for a market top. It fires when the herd is buying and the pros are selling. Here's the math behind it. And it just tells you have to have new highs and new lows. and lots of them. The moving average of the NYSE is going up. The McClellan is negative on the same day. 52-week highs can't be more than twice the 52-week lows. Think of this as volatility in the market. It occurs at the ups, at the highs. You can also get volatility at the lows. The one thing that I pretty much don't know what to do with is number 2. That becomes too tight a lot of times. So I've actually looked at it with or without the greater than 79. Old slide, but you don't see anything here with a negative number, which means negative, which means it's going up. After confirmed Hindenburgs, which is a second one occurring within 31 bars, I believe, every time the market goes down. Now, a lot of times it goes down just a little bit, so who cares? You care because 6 out of 23 up to 2001, you had major corrections. Now, 2006, if you don't see, was painted on literally by HDSI calling out the preponderance of Hindenburg omens coming into a top in 06, only 11% drop. You see Hindis at tops. Major run into 2007. Now, I do want to point out a single Hindi doesn't count. You need confirmation. After this, you had a 14% drop. This was the 14% drop. And then we got back to all-time highs. And again, you have to be blind not to see these red lines. And at the very least, pay attention. Doesn't mean you have to get out. And those are the Hindis. Do these things work? They work. My God, do they work. And then we got the black swan. Well, here was February of 2018, market sold off. Here is September 2018, the market sold off. Here is August of 2019. This one is already selling off. You had to jump in early because it wasn't a big sell-off, but it came down. 2020, here's the market running up. Here was the peak before the COVID crash. What did Mr. Hindenburg know? Because starting in January, it started firing as the market went higher. Well, Mr. Hindenburg doesn't exist, but the pros were selling it to us, and the markets were going higher, and then boom, 22. This was a tough one because not all the markets were behaving the same way. But the same thing, going into the highs, we saw Hindenburgs, we saw a spurious one, still getting them. Now, the interesting thing was, if I actually look at the NASDAQ in 2022, late 2021 going into 2022, I think the NASDAQ actually called it better. And that made me start to rethink the Hindenburg. Not that it doesn't work, but to recognize that we're different than 1950. We've got the NASDAQ that has all the technology stocks. And we've got the NYSE that's got oil, banks, and weird crap in it. So maybe I need to look at more than just the NYSE. So that's the NASDAQ, the Hindi leading the decline. And then here is weekly charts on the NASDAQ, but in the boxes it talks about all the different signals that fired. You tell me, did the Hindenburg mean anything on the NASDAQ? And then when I looked in early 2024, it was doing it again. It doesn't cost anything. What's the difference between thicker and thinner vertical Hindi bars? Simple. Each bar is 1. You put 2 or 3 or 4, it gets thick. So you could see that this is just one candle, and here you catch 1, 2, 3, 4, 5 candles. It can fire 3, 4, 5 days in a row. All right, and then again, 24, same thing. So this isn't designed, I'm not here to sell you today. If you want to talk about Market MRI Pro, you can call me. You don't see this because that's the beta version. That's not out yet. But Praveen built in, and this is an automatic view. You don't do anything to make this occur. And it may not show up great. Let me try and make the candles a little bit bigger. On the left is the NYSE. On the right is the NASDAQ. Look how the NYSE came and tagged the 200 exactly and bounced on Friday. You don't think people are watching that? Down here, you're going to get signals. And if I go back far enough, you'll start to see the triangles, or the upside down red triangles. Those are Hindenburg omens that now this is a weekly chart, and most of the charts that we looked at before were daily. So Praveen is in the process of making it so we'll be able to flip between daily and weekly. He had to do some work on the different signals. You can't see it very well, but on April, why did I get so much conviction at this bottom? Because Praveen invented the opposite of the Hindenburg. We call it the defibrillator. And it's a rare indicator, the green triangle, that signifies massive bottoms. And so we built these, everything I'm showing you today except for those group inclusion filters and smart groups, we've built it into Market MRI Pro. Let's talk about the Bollinger stuff that Bollinger doesn't teach. Putting meaning in percent B and 3 bucket skipping, and why this is such a critical part of my market timing model. So Bollinger Bands, you basically take the stocks in an index, you put 2 standard deviations, and stocks should sit in between these 2 deviations of their price, except for 11% of the time. So 89% of the time, stocks are going to be between their Bollinger Bands. 89%. So if a stock is going to be inside the Bollinger Band, 89%, and it gets out here, or it gets out here, you know it's going to revert to the mean. So that's one message. Second message is, if you're looking at the components of an index and they're really building up underneath the Bollinger Bands, what does reversion in the mean mean? It means the stock market's going up. If they're building up here, stock market's going down. You just have to wait for the move to start. So I look at percent B, and this is an Ian chart. He's so brilliant. He thought this stuff up, not me. I'm just the storyteller and the user. Percent B defines where a stock closed within the Bollinger Bands. The bottom of the band we put at 0. The top of the band is a 1. If you're in the middle of the band, which is your 20-day moving average, you are half. So if I tell you IBM stock closed at a percent B of 0.9 on Friday, I have no idea, I'm making that up. That tells me that it closed right at the top of the band. If it was at minus 0.2, it closed down here. So all percent B tells me is where I close within the Bollinger Band. Ian did the math, and he found that if you have a 0.24 change, that's a big day. If you had a 0.4 change, that's a really big day. And we used to scan for stocks who had kahunas because something was happening with that stock, because 0.4 was rare and 0.24 was rare enough that we wanted to look at. So that's the other thing that came out of this. The kahunas, and then and those buckets. Now let's talk about the buckets. So you could take from 0 to 1 and divide up into 10 buckets. Then you can have a bucket on the top and a bucket on the bottom. And that's what he did. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 are the 10 buckets. You can see what they range in percent B. You have the first bucket here, which is the less than 0, and the greed bucket, which is greater than 1. And he taught us that if the market moves, so the percent B of the S&P 1500 or whatever market you're looking at, more than 4 buckets in a given day at the index level, you better think about getting out of that market. If it moves up 3, you might want to start buying that market. And then he used the negative Phoenix, which we'll talk about in Kahuna, to tell you it's time to go short, or the Eureka and Kahuna to go long. So bucket skipping matters. So I find that if I plot this pie chart of when I'm overbought and oversold, that in an uptrend, when you're overbought, you keep getting more overbought. But in a downtrend, when you're oversold, is when you start to reverse. So I use this religiously. This is from Edge Rater, which I love it because of the back testing ability. You could see back in '09, and it actually was October of 2008. Um, and I was showing that no matter how bad it might look, 40% of the stocks below, 50 below, 70 below, the market can get worse, 75 below, 100% of the stocks below the midline. So just because you get a picture that looks like that, and I'm getting all excited, it doesn't mean it happens the next day. And in a horrible bear market, you can get even more oversold. Here's where we were in Edge Raider on Friday, a 50-50 market. A little bit leaning to the left, so it's a little bit more bearish than bullish. 56% of the stocks are below the midline or the 20-day moving average, but it's still a kind of a bell-shaped curve. So here's how we use it. When it looks like that, Ian would call it camp sunshine, meaning it's time to buy. Okay. When it looks like this, kind of where we're at, it's neither here nor there. And then when it's all the way to the left, you feel doom and gloom. But when it gets too far to the left is when you buy. And when it gets too far to the right is when you sell. So this ebb and flow, this is how we reproduce it in Market MRI Pro with the NYSE, the NASDAQ, the S&P 1500, and the Russell 2000. Why? Because they're all different, and you may see leadership in one versus the other. Bingo, bongo, bango. It gets faster from here, so we'll probably go another 30 to 40 minutes max. And any questions come in. Hope I'm bringing back some good memories for those that used to go to the Ian meetings, and for those that didn't, I hope I'm tickling you a little bit so you think you might want to learn this, because it's a shame to waste that guy's knowledge. Bingo, bongo, bango. This here, this line, is something that really represents the ebb and flow of a market. You know, when you get to euphoria, it's when I make mistakes. I start buying things that I probably haven't done enough research on. Is a top, and then the market sells off, and there's that sell-off. And when you get massive despondency and depression, maximum pain is probably the best time to go long because the market's bottoming. Well, how do you know where you are at a given time? So Ian and others, including me, because I got one of these as mine, or partly mine, we created the ebb and flow. The bingo, which is the baby out with the bathwater sign. The phoenix, which is, you think about the phoenix, the bird rising from the ashes. It's a bad time in the market, ashes. The eureka, which is, ooh, we're getting better. The bango, which is, you start to get a signal of change. And so let's talk about these indicators. The bingo. Again, this is the quote unquote baby out with the bathwater signal. In a bull market, it may signal imminent reversal. So look for eurekas, meaning the eureka is confirming. There's the math. It's not secret. In a bear market, if the market sold off and sold off and sold off, it's not typically one bingo before you correct. You might see a number of bingos in a row. But when I see a bingo, especially in a stock, and then within the next day or two I see a eureka, which I'll talk about in a second, I start thinking I might want to look at buying that or paying close attention to it. So a bingo is a mathematical equation that I used to say it was akin to a follow-through day. It's the kind of thing that you see after a sell-off, and maybe after the market had one day that went up, when you see the bingo is telling you that you're selling You might be getting near the bottom, baby out with the bathwater. So you could see the bingo are the gray lines. It occurs after big sell-offs. Now, in a bad bear market, it doesn't mean anything. But notice, you see any green after this bundle here? No, you don't. You see a little bit of green here, but notice on this pullback, all these green are the Eureka bars. So when I see the bingo followed by a lot of Eurekas and a lot of stocks breaking out, here, green. Here, you got a little run up and then it went further lower. Um, that combination I pay attention to. Bongo, this is one that I helped create. This is our trending indicator. The math is there. It's slow as molasses, but it's good. And if I want to filter for stocks, let's say I want stocks in a strong uptrend, both the weekly and the daily bongo are going to be green. If I want pullbacks in an uptrend, I want to keep the weekly bongo green, but I want the daily bongo to say I'm pulling back. If I want a pullback trigger, it's when it goes from short to long after a pullback. Similar on downtrends. He's not dead yet, so I'll be clear because I'm talking about dead people a lot today. Stan Weinstein's a lot older. He's still got a lot of hair, but still kind of looks the same, but the hair is kind of white. He talked about the market cycles. And I thought, what do we have here? We have trends, and we have a 30-period moving average. Bingo. So what I've done is I created a timing model. You can create it probably in HDSI. I never tried. And I look at price. I use a 30-period WMA, and I use a bongo. This is a weekly model here, and it will get me out of the market and keep me out of the market until the danger has passed. Now it's going to always get me in late, so I'll use a daily bongo to get back in. So I built a timing model using the bongo. The bango, I slept through this when he presented it the first time because I couldn't remember what was in it. But recently, I did go back, and you'll see what we did with it. The bango is capitulation when you get massive numbers of new lows and new highs. So when you're seeing new highs and new lows and you're flipping around, it's telling you something's changing in the market. So here's your Hindenburg Omens. We're going back in 2007. Here's a bongo, an attempted rally. It didn't go too far. It did have one Eureka, a bongo, and a bunch of Eurekas. Bingos here as we're selling off, but boy, this was the 2008 financial crisis. It didn't do you much. It's just we were babies out with the bathwater, and not one Eureka. Now, getting a Phoenix, which is the red one, is the opposite of the Eureka. It tells you the market's going down. Unless you've been going down a lot and now you're seeing that signal, sometimes that tells you the market might be getting ready to bounce. I look for confirmation. You notice these arrows are showing the massive number of new lows. And that's the bango. That's really the final capitulation, is high volume sessions with massive numbers of new lows. The Eureka, this is that music to the bulls. This is that exuberance move on the market. Now, if you've had a massive run and you have a bullish exuberance after a massive run, you're probably topping. If you've had a massive pullback and you get a Phoenix after a massive pullback, you're probably bottoming. But except after the end of a massive run, a Eureka after a massive uptrend's bad, but at the beginning, that Eureka is that what we use as kind of like the follow-through day. And following a bingo, a Eureka might be signaling a reversal to the upside. The Phoenix, after you've had a big run up and you start to see Phoenixes, it's telling you that the market is probably getting set for a pullback. So you go back to this and you've got this musical chairs. You're getting bingos as you're selling off, babies out with the bathwater. Phoenixes, the market's doing bad. Now, if Phoenix comes in after a big sell-off, pay attention. You may be reversing. The Bango, the massive number of new lows, massive despondency and depression. Then you get Eurekas. Somebody's excited, exuberance coming into the market. The Bongo Daily goes from sell to buy. The Bongo Weekly goes from sell to buy. And we run up to the top. And then we start getting another Eureka at the top, which says, uh-oh, I'm getting exuberance, irrational time. And then the Hindenburg omen fires. We know it's time to be careful. The Bongo switches daily, weekly, and we're getting the baby out with the bathwater. So you can start to map in your mind. And it took me about 10 times of listening to Ian talk about this before I figured it out, of what the market is doing. So I want to know what the market's doing when I look at a stock. So if I go back to HDSI one more time, it's funny, when I started with wealth charts, which I use as well, and I stopped using as much HGSI in my presentations. Everybody thought, oh, you don't use HGSI anymore. No, I never said that. I use it all the time. I use a lot of programs all the time. So what I was going to talk about here are the Hindenburgs and everything. And I'm just going to pull up, I'm not sure I even know that stock, but let's open up a daily chart. Let's make sure it's not hidden. Come on, daily chart. Let me try that again. Let's go to Arista Networks. All right, I don't know why I'm not getting a daily chart. Is it going on to another monitor, which is always a problem? Let's just do this. Let's just reset HDSI, open up Designer. Let's go those top 50s. Let's go to the most recent. Can't modify it. I know that I'm not trying to. Let's open up the warehouse view. Let's rank these by scorecard, which is one of my favorite ways of ranking, because it's a fundamental and it's a, let's see, combines fundamentals and technicals. Somewhere down here is in this one, index views, scorecard combo. And let's just pick something here that, let's look at Grinder. And you probably all know what Grinder is. It is Tinder for the alternative lifestyle crowd. And it's got a beautiful chart. I mean, incredible chart. What a great uptrend. This is one of those plays where I would have been better off had I not known what they did. Right. I got a lot of windows open. I don't even know where that one went. But basically, on this chart, this daily chart of Grindr, let me bring Grindr back. Here it comes. I have the Hindenburg omens here. So I know when I'm looking at Grindr that I probably don't want to go all in on anything when the Hindenburg is firing. I got to be careful. Down here, and this is the way I construct my charts. I have two windows, volume window with Eureka and Phoenix, and then I have the NYSE Eureka and Phoenix. So in the top volume window, I am going to plot Eurekas, green, on the NASDAQ. On the bottom window, I'm going to plot them on the NYSE. Here's a Phoenix. Here is a Phoenix, then a Kahuna. And they can move you all over the place. But I want to be able to watch what the market is doing in a daily chart. So even though these are on Grindr on a daily chart, they're paying attention to the NYSE and the NASDAQ for the signals, and the NYSE on the Hindi. I don't have a way, I don't believe, to do the NASDAQ in HGSI. Now, I got to find something bad. What would be a bad? Let's look at, what do I want? Let's see if Tesla, which I'm not saying is bad. I'm just curious. I want to find bingos for you. See if I can find a bingo, because you can get a bingo on a stock, or you can get bingo on a index. So here is Tesla, And okay, I'm going to move the price a little bit because that box is in the way. I don't know why it's so slow to write. It's because I got too many things open. I know why. I don't know why it's. I don't know why. Let's just look at the right edge of the chart. Here is Tesla falling down. Here is the 200. I don't like it. Broke the 200. These are the bingos firing, saying, boy, this is exuberant selling. And then here I had market on the NYSE, a Eureka. I had a Kahuna. I had a John Person buy signal. Those are three signs that the selling might be over. And it wasn't over yet, but ultimately it went higher. So we had a little rally and it failed at the 200. And I think that's probably what I should have stopped it and said it about, because it worked. Just what was support before turned into resistance. So you had a little bump here. So the signal worked, but I ran into resistance. And that's, I look at support and resistance constantly. All right, gas in the tank. How do you predict where the price is going? All right, and I think that's a very important question. So a long time ago, I started spending a lot of time with Market Smith, now called Market Surge, because I am a believer that ultimately, if I look into Market Surge and I go to weekly, it will tell me that the PE ranges on GE Vernova over the last 5 years is 37 to 89. I remember Kramer would say he would pay up to twice the earnings multiple for a PE. All right, so if the range is 37 to 89, I mean, and it's at 65, it's kind of in the middle. So it's in the middle of its PE, 2.7 times the S&P. That's kind of bothersome. But I could see here that it's growing 60%. So the multiple and the growth rate into 26 are kind of the same. And if it keeps its PE of 65 and it delivers $11 of earnings, that's a $700 stock. Okay, I might be okay because I'm predicting where the stock price is going to go, and I think earnings matter. Now, even if that PE was to drop to 40, it's going to predicting a price of 440. So about where it's at now. So if we meet our earnings growth, what's the likelihood the PE comes in? I don't know, because if we have a recession, I can promise you the PE comes in. And that's the challenge with these high PE stocks is the recession changes everything. So I look at earnings. So gas in the tank, I can run a scan at HGSI. So here all I did is I chose all securities. I chose my combo list here. The combo list was the list I picked. So it's about 1,000 stocks in it. It was 1,015. I have a filter called gas in the tank. These are the stocks that it picked up. One of the stocks that I'm in right now is Sezzle. And if Praveen is here, Praveen, you missed a split. We missed a split in Sezzle. It looks like it fell hard. It was a big split, which was a positive. And why do I like Sezzle? Its multiple is 40, and look at the growth rates: 1100, 1125, 711, 354, then 55 and 45. I think it's trading at a bargain. Now it's moved up a lot, so I might actually go back and say, do I trust HGSI? Why not? But let's just look at it. SEZL. Talk about a new stock. So 70 times 3, $210. Well, it's a lot cheaper than that. 30 times 4, $121. Okay. To me is the price target I would have. PE is 39. The rate's slowing down. That's going to make me think a little bit, and I have a big position in it. It's a turnaround stock. You can see it went from negative to positive earnings. And it's an IPO. That's as far back as it goes. So I spend a lot. Now, I love Praveen, what he's done. In a manly way, I love him. Um, and we've gotten to be very close because we talk a lot about the program we built. And one of the things that he did was, and we talk a lot about features, but I couldn't program a crossword puzzle. So here's Sezzle. This is what I talked about, Praveen, that we have a split we missed. We got the fundamentals built in. So I could have looked at this and saw, man, look at these earnings per share change quarter over quarter. And that would be comparing May 7th to May 8th in the prior year. So we have 22 cents went to $1. That's pretty big growth and a big surprise. Same thing on revenue. We see a multiple PE forward of 47. That's your growth rate. I like it. That's why I bought it. But we have earnings built into our program as well, and we have news stories. And if you want to read it, this I thought he did really cool by just clicking on it, and you'll pull up whatever the reference was. This is a Zacks article. So HGSI does a great job on earnings as well, but I think it's a very important thing to be able to look at, and that's why we programmed it in. So gas in the tank is when I look at, typically is I see great earnings growth coming, and typically, even though the percentage is down, imagine if the PE stays the same. I am replacing 36 cents with 56, so that's plus 20 cents, and 49 cents with 71, that's plus 22. So that's 42 cents of new earnings. And if I'm getting 40 times 42 cents, isn't that like $16? So if the multiple doesn't change and I hit those two earnings, that's a 16% higher from here. I like gas in the tank. Three-road scenario, high, low, and medium. I go into a sales call. I got a big sales call on Wednesday, so I'll be spending the rest of today, on Tuesday rather, building out my presentation. It's for a large insurance company. I'm trying to take over their risk in oncology, which if you know anything about healthcare and you own United Healthcare, that's partly why they fell 25%. So we're a little nuts, but we think we know the secret sauce. But the three-road scenario, always be prepared for different market and life scenarios. I'm going to go in with a high, medium, and low road of what we can do for them, my expectations. Well, the same thing with the market. Here's the S&P right now. The S&P has just pulled back into the 200-day. Since it's an open bar, it closed up here, not at the low. Since it's red, it said it was down for the day. I got to be prepared. This is before the futures came out, but who cares what the futures are? We got futures before Tuesday that can sell off. Is this market's going high to new highs? I think it is. I do think there's a fair chance that we're going to go test those highs. I really do. That's the high road scenario. The intermediate scenario is totally cool. We're just going to chop along on top of this 200, and this will just become a longer thing. That would be great. That's sustainable. That's consolidation before it goes higher or lower. Or tomorrow morning, Trump's going to announce 500% tariffs on Russia because he's mad at them because they're getting nastier in Ukraine. And then we're going to get the red bar, and we're going to see if we, do we test here first? Probably. Do we go to here? So I think those scenarios are all possible. Now I'm going to handicap them and go 50, 30, 20. 50 we go to higher highs, 30 we consolidate, 20% we go down. And that's good for about 1 hour because every hour I'm going to readjust my handicap. But I have to be prepared of what I'm going to do. So I'm always thinking the high, the low, and the medium road scenario. And then lastly, the high jump. Estimating targets for extended stocks. Ian is another of his brilliance, and I'm not going to try and imitate him and talk about his wife's roses and rust and brown spot disease or black spot disease, signs that his wife's roses were getting near the end of their life and they were going to die. I like math. So what the high jump does, it measures the extension of a security from its 17-day, its 50-day, and its 200-day moving average. And if you add those three and you look backwards, you see how high it is compared to past history. And if you think about a rubber band and you pull it and you pull it, you're going to get to a point where it's either going to break or it's going to come out of your hands and snap your fingers on the other side. It's going to be the same place every time. And that's what the high jump does. So in green up on the top is the sum of the from the 17, from the 50 plus the 200. You just take the price minus the 17, which happens to be a negative number here because we're below it. The price minus the 50, positive number, and the price minus the 200, a positive number. And then you add them up, you plot them, and you look back here, what happened here? Oh, we pulled back. What happened here? We pulled back. So what do you think will happen if 10 bars later we were up here again? We're going to pull back. It's like a frickin' spring. All right, so if you knew that, wouldn't you want to know the high-low jump or high jump on a stock before you bought it? I would. It's more evidence. I'm looking for an edge. Now, I took it further. I said, if the high jump works for when a stock's too extended to the long side and it tells me to be careful and maybe look for a shorting signal, is there a low jump that shows me we're so extended to the lower side it is going to bounce? And the answer is yes. So what I came up with, and Praveen has probed in, is this oscillator here, which is my high-low jump oscillator, will go from plus 100 to minus 100. When that white box says 0.95 or 95 point, that means it's the 95th most percentile of extension going back the last year. When it says minus 95, it's the 95th percentage most extension to the downside in the past year. On the weekly, it's a longer time frame. And on the monthly, you need a lot of data. I don't even know if we posted on a monthly. So if I know an index is at minus 98, I know the index is going to bounce. If a stock is at plus 98, it can go higher. Extended things can get more extended. But if it hasn't gotten more extended in the past year, why would I think it's going to get more extended now? So here is Netflix, and notice how low jump triggered at the bottom. Low jump triggered at the bottom. Here it's pulling back, and you can see it's at 77. What is the correlation here? This has got nothing to do with volume. It doesn't have to do anything with movement within the Bollinger Bands. I think I've got a non-correlated indicator here that's telling me the market's extended to the downside, it's going to bounce. I use it all the time. This happens to be Market MRI Pro. Again, I've now gone through my favorite Ianisms. And like I said, I could probably do part 2 because I forgot as much as I remembered. And I've got a bunch more to go back and reinvigorate myself. And I'll be bringing this more to that Orange County meeting. Now let me just make a couple comments. I don't make a penny at that meeting. I don't get paid airfare. I think they give me the hotel. I don't even get fed. The point of this meeting is to give back. Greg Mills runs it at a break even, which is why it's relatively inexpensive. If he has a surplus, he pays for dinner one night. And the fees pay for breakfast on Sunday for everybody. We bring bagels and pastries and things in. If you can be there live, there's probably a couple of chairs left. There may not be. There's no guarantee. If if you can't be there live, there is an internet version, same price. Would love to have more people sign up. And it's probably worth it for Get Me, for John, Chris, and Matt, and Dan. And I will record the meeting just like I recorded today. And I will probably post the recording on Top Down Trader. I'm not sure if I'm going to put it out on YouTube or not. I always end up doing it, but I'm not sure. I want to think about it. And I like to play back and make sure I didn't say anything that's too colored that will get me into trouble. Um, Let me just a couple comments about Market MRI Pro before I say goodbye. Before I get there, HGSI, www.highgrowthstock.com. I think you could see it is a fantastic, powerful program. It remains. My only negative comments I've made, high learning curve, and a user interface. Once you figure it out, it's so simple it makes it even better, but there's a learning curve. EdgeRater, Chris White, the proprietor, will be speaking at my meeting in, Greg's meeting in Orange County. EdgeRater.com. He always has a special at the meeting. It is a vehicle of creating spreadsheets for a lot of the things I showed you today, identifying your database of stocks and running those analysis against those stocks. It includes data. And then a few comments about Market MRI Pro, website under construction. The launch pricing will end after the meeting. But if, for example, if you sign up for the meeting in Orange County and you're a member of Top Down Trader and you've never bought anything, you'll get your $400 plus $100 because you're a member of Top Down Trader discount. Now it's an expensive product; it's $19.95, but for those that haven't bought it yet, you can get a pretty significant discount. And I'm going to go into the program just for about 5 or 6 minutes and show you some of the new things that are coming and when. And the reason why I really went with Market MRI Pro for me is Praveen built a tool that reproduced my workflow 100% and made it much quicker because I got other reasons to spend my time. And here I am on Memorial Day, and I should be out on my boat, but we took it out yesterday with a bunch of friends. And you can see that my boat is called Stocks and Docks. So again, the Orange County meeting. Before I say bye, let's go into the program. Let's see. I don't know, Praveen, do I have to reboot the staging version to fix what was not working right? Let's see if he says anything. All right, so this is Market MRI Pro. I'm going to reboot the staging version. When I say staging version, what that basically means is the stuff we're working on to bring to market. Just give me a second. Close down some of the many windows I had open. If you think about it, I've got Zoom, I've got Snagit doing the video as well, TradeStation, 2 versions of Market MRI Pro, and a bunch of other things, all sitting here running at the same time. I'm pretty happy with how my computer is holding up. All right, let me make sure that works. Okay. I'll let that run in the background. For those that, and the John Person stuff, he hasn't even seen yet. And I'll have a meeting with him to look at it this week. But it takes a few seconds to load, but it loads 3,400 stocks with his screen. If you ever tried to do this in TradeStation 1, you would already been clicked off and shut down because it'll only do 1,000 if you're lucky, probably closer to 300, and that's how quick it does it. But that's an add-on that's coming to the program. So let me flip to the regular version, which is this version. So current version, and just to show you how it reproduces my workflow without teaching what I'm doing, I have a thing called daily briefing where it includes a number of ETFs and their performance during the day. Our data feed is real time. To get there, you just hit this every time you want to update it. Updates it in about 2 seconds. I don't expect to do anything because the market's closed. This gives me a real-time version of new highs, new lows. Here is taking the three major indexes that I look at, 1500, the NASDAQ, and the NYSE, and looking at what percent of sectors, industry groups, and stocks are up at a given point. Here are the S&P sectors. I could look at different periods of time, and then I have a bunch of themes, and no shocker, uranium was the top theme on Friday. When you think about what I showed you today, I've got my timing model built in, and what matters is the line underneath the charts. Green is a buy, red is a sell. The short-term model remains all long, and you could see it doesn't wait till the run's over to flip. And then have index charts that will update real time during the day. But like everything else, I'm an end of day trader. I'm not going to stream quotes and pay zillions of dollars for data and charge you $100 a month for data. The program includes the data, and all you got to do is hit that and it updates. So when you look at a screen, you do that. First time you open it, it updates as well. I've got commodities, and nothing special here, except it's my workflow. I have the buckets going real time. And Bob, if you're still having your issues, please let Praveen and I know. Come on. All right, let me flip to the other version. Sometimes I hit things too fast and they get mad at me. So the buckets will have the NYSE, the NASDAQ, the Russell, and the S&P. Market breadth, all those tools that I talked about, I put into the market breadth. So the left is the S&P, NYSE, on the right is the NASDAQ, and I'm thinking I might put a third window and be the S&P 1500. I have to talk to Praveen about that. Down here you have the greenish white are Eurekas, the red are Phoenixes, the green pluses are Bangos. Excuse me, I gotta get my math right. The green pluses are bingos, the red pluses X's are bangos. Hindenburg omens are the red triangle, and as I showed you, buried beneath here on April 7th was the defib. All of them are there, as well as traditional breadth indicator stocks above the 20, 50, and 200, new high, new lows, advanced decliners, and up-down volume, and the bongos. And then I have ratio charts. One quick way to see what's working is to do ratios of the sector ETF, or in this case here, Bitcoin versus the spider, and anything that's pointing up here is working. And you could see that on Friday, things that had sold off started turning up. So staples, utilities, real estate, and healthcare. That was sort of a one-day rotation is my guess. You can see technology, which had been very weak, is now very strong, although it sold off the last couple of days, as had discretionary. Now, these are hourly charts, and Praveen has promised that he's going to give me daily and weekly on these charts as well, and then we'll be able to put some drawing in here so you can do trend lines. I don't know the role of index of giving you indicators or not, but that's something we're talking about. Everything I've just showed you is in the program today. Now, one thing, and I switched to the I guess we'll call it the beta version here. One thing that, come on, where are all my stocks? All right, you fixed the person. Okay, perfect. All right. I have a list that I call JAS. It's all the stocks in the NASDAQ, the NYSE, and the Amex in one big pot. We filter it for $1 and 100,000 shares. It gives me about 3,500 stocks. And then across the top here are how many up dots. So momentum, breakout, big volume, big gap, and CPR. How many bullish, how many bearish? Is my weekly bongo bullish, green, or bear? Or is my bongo bullish, green, or bearish, red, and how many bars? So you could see on this crappy splash beverage, the daily bongo has been green for the last 29 bars. Oh no, that's A. My bad. I'm looking at the wrong quote. On A, the daily's been green. No, let me get this right. Oh, that's supposed to be red. All right, I'll have to figure out why. Um, hold on, I'm on a weekly chart or daily chart. Okay. It's never the program, it's the speaker, which is true. So here's A. So we know that the daily's been green for 15 bars, and the weekly's red. Or the green's been green for 29, red for 15. On-balance volume for one bar has been negative. Relative strength has been negative for 8 bars. Weekly relative strength has been negative for 15 bars. So all my indicators, I can pretty much get a readout here. So if I just want to see stocks that had a lot of green dots, I just hit up. And we're colorblind. Green and blue are the same. Here's UEC, comes right to the top, broke out above the 200, massive volume. There's my CPR dot, my gap, my volume, my breakup momentum coming out of a squeeze, and relative strength and OBV are rocketing up. This was probably my favorite stock of the weekend of stocks I would buy, BWXT. Similar story, breaking out above the 200. You can see the weekly and daily bongo have both gone bullish. It's not extended. There's volume, and again, CPR, gap, volume, breakup, momentum coming out of a squeeze, relative strength, and OBV. So I can just filter my list like that. All right. The other thing I did to filter it is we built in some scans. I like to get down to $5 and 500,000 shares, and my favorite scan is my 2 days momentum up, which didn't have a lot, but it had NNE. So same pattern as the last. Massive volume, lots of dots. This is a nano nuclear energy. Again, nuclear was news driven. And the other one is fuel cell. I don't know anything about this. And I would go through this and say, I don't buy it. It's too far below the 200. And if it runs up to $8 and comes back down, I don't want to mess with it. But I have scanners built in that we're going to continue to expand. And any educator that comes in is going to build out their own scanners. To carry on, what's different here that you'll be seeing coming out hopefully before the meeting. I can now take any user list and I can rename them. So I'll just take that and call it buys. And watch over here. Oops, I got to go back to impulse. Oh, let me do that. And I hit plus. And hopefully that should change it to buys from buy watch. So now you're going to be able to rename your stock lists. And starting at weekend review, this was the hot list, then A, B, C, D, E, F. So we've made it so that you can rename your lists. And I think we also made it that you could add additional lists as well. So, or you can delete a list. So you'll be able to customize the columns. It doesn't seem like a big deal, but when you got 5 different lists, you don't always remember. That one should be ready to come out hopefully this week. We continue to upgrade the indicator set. So Praveen has been working his butt off over the holiday, building in new advanced declines, up-down volumes, new high, new lows as indicators. So you can apply it to any of the indexes, and it tells you here what you can do. My indicators, you don't get JP's, which is still in staging unless you buy his package, JP being John Person, which is not currently available, so it's not worth talking about it. And then momentum, price, volatility, and volume. So there are things in this list, Tom, that are not out yet. I hope to get it released before the meeting. In fact, before I if you don't have the product, you're coming to the meeting, you'll get a little trial starting a week beforehand. That is another thing that's new. Um, you'll notice here, and again, I am not a day trader, but some people are, and if you want hourly charts, we now have hourly charts. Again, this will be coming out very soon. I'm not here to bait and switch you and get you all hot and bothered. These are all, they're already, I'm using them, okay? Um, and to me, it's, I don't care, but I know some people do. You want 5 minute charts, you can have 5 minute charts. I'm not a day trader. I don't know the point. Yeah, of course. Wow. I wish I would have known at 15:36 on May 23rd that it was time to buy the stock. Um, I have a day job. This is built for me. But since it's not just me, um, there's all these things will be coming out. Um, we've made some tweaks in some of the things in the fundamental panel. I don't think there's any other big changes in this view. Timing brief. All that we've done here is we've added the updates. You can update intraday in case you're not sure it's the last signal. Remember, if you're on a weekly chart, you do an intraday update, you won't even notice it because it might be inside that candle. We made sure that all the windows with charts are going to have the drawing tools. Um, we didn't put indicators here because I didn't want to clutter it up. I like guppy charts. We didn't talk about them today, but they're pre-formatted. If you don't like them, you can kill it. Index ETFs is again pre-formatted. Some of you that know my buddy John probably saw the little green arrows and the red or triangles and red. Uh-oh, they're in, and they are. I mean, this is the version that I use routinely, and yes, the staging version has John's stuff built in. But you can now and if you can't yet because it hasn't released, because I have to go look what's released, you'll have the ability for drawing and adding indicators to commodities and US ETFs. And again, you have a button here that will refresh during the day, because if you don't remember if it's updated or not, you could update it. Commodities is the same. Daily briefing. I added things from the beginning. I added volatility, the dollar, and Bitcoin. I'd like to get a 10-year yield here, and I think Praveen's going to make it so you can add your own. And I think he may have turned it off because it was driving me nuts. But we did have the ability to pop out any of these windows. Let's see. Yeah. And you could then put it on a second monitor. So this is a great one to have up all day. I've helped people find a spreadsheet in the past and it just stopped working. Sager's tools are great. I think we've expanded on them here. And that you don't need another data service. The buckets are the buckets. I don't think there's any changes anticipated. If you don't want to look over here, you can see the stocks below is 6, stocks above are 2. You're looking for 30s because when it's 30s, you start to worry about it. The market breadth, the hope and dream is that when I hit daily, I'll be able to get daily signals. It's not there yet. If I have daily signals, can I refresh during the day? I don't know if that's meaningful or possible. Because some of the things are probably not updated daily that are required down here. And then I do think I'd like to add the S&P 1500 and have the NYSE, the NASDAQ, and the S&P 1500. Indicators I've asked for in drawing as well. I mean, we don't want you to mess up the charts to the point where you're calling us to reset them. So it'll have to be user defined. And if I was to go back into the index ETFs, for example, if I hit the little gear shift here, I have the ability of doing some customization and adjusting what's in it. Praveen, one little sidekick is if I add too many things and I scroll down, I don't get to the end, I have to enlarge the window. So you'll have the ability to delete things here, add things, customize them. If I decided I didn't want the high jump here, I could hit the X and it would go away. I'm not sure if that's out yet. And then what I'm really excited about is things that you haven't seen yet. So I can go over here actually up here to the plus. And now I can create a new layout. You'll be able to create your own layouts. Do you want a screener or not? Do you want top, right, bottom, or left? Do you want, how many charts do you want, chart windows on that layout? Do you want to have them linked at the symbol? So you have 3 charts, 3 different time frames linked at the symbol. Or I want 6 charts of different ETFs for the market, and I want them linked at the interval that if I change it to minutes, they all change. And then you name it, you can create it. If you want to duplicate an existing, you can select it, put a new name, we'll just call it JAS Layout 5. And I had some bugs in this. Let's see if it works right. So I'm copying that layout. Make sure I highlighted it. Hit copy, and it comes in here. And I've just reproduced my initial layout, which was JAS Layout. I guess Praveen fixed it because when I said I had some issues. It was simple issues. The indicators weren't in the right order, and they're probably still not because everything's up top. But so basically here we just rebuilt it. Now I'll use this, which we're going to fix, to show you that if I want to move, you see the arrows that are in the window? I can move things up and down. I can move. So I just move those. I want to move this thing down. I move that down. So I'm able to move the panels as well. I think that was a great fix. I'm not sure that's out. All these things are tested. We've been spending, not me, Praveen, has been spending a lot of time on the stability, which has really been a big thing. And you know, I'm not a software developer, although I have a software company in healthcare. And what I've learned is a little thing that's wrong on one line of code makes things very unstable everywhere else. And when you fix that line of code, things are fine. So the question that was asked was update. Praveen, is it fair to say before the end of this week we'll push an update? Are you with me still? He may have dropped off. Are you talking? I don't hear you because I got my sound turned off. Well, my goal is to get an update out this week, and most of the things that I've showed you, yep, he hit yes. Any other questions about anything before I say goodbye? I can't do these less than 2 hours. Man, I talk too much. All right, well, I'll say a few things before I say goodbye. First of all, I appreciate you coming out. I mean, I don't keep a mailing list, so I just throw out a note in Top Down Trader. I put something on YouTube, and that's going to kill us when it comes to selling Market MRI Pro because I don't have a big list. But whenever anybody comes out, I do appreciate you being here. I hope you recognize this was not about selling you anything. It was about paying homage to Ian and bringing back memories of what was just a great thing, great time at his meeting. So he used to tell everybody, I'm not a guru, be your own guru. And I think that makes a lot of sense. I've become my own guru. I don't have to be your guru. I have to be my own guru. Investing is a business. Make sure you have the right employees. For me, that's tools, software. I use gaming computers because even though I had some things were slow in HDSI, I've got a lot of open programs. And yes, Joel, if you're still with me, I have 3 or 4 computers for sale. I always do because every time new technology comes out, I front run the market. Continuing education is coming to things like this. I'm speaking to the choir. And then trade the market we have, not the one you think we should have. Take that 3-road scenario and look for expectation breakers. And what an expectation breaker is this. Let's look at the Russell. So if in the new version, if you type a letter, it opens up the box. You don't have to be in the box, but then you got to type that letter again because it's Now let's go to a weekly on the Russell. And let's go, here's the, I remember how excited I was because it felt like, it felt like, this is the one I do horrible with, right, Praveen? It felt like we were in a Darvis box. Let me try that again. This is the one, I, okay. It felt like we were in a Darvis box in the Russell. And this is all of 2021. It just felt like we were in a Darvis box. And we broke out. And if you go back and listen to my videos, it wasn't my finest moment. Because I was so excited that after a sideways move for such a long time, we broke out. I went to 2 minute version of journaling. It's my videos, Bazzi. Everything I buy, I talk about on my videos, and I go back to my videos. I used to take snapshots of every chart, and then I use trade log to keep track of my trades just to go back and see how I performed. Here is a Darvis box. When we broke out of this Darvis box, I was so excited that we're going to go to new highs. And then we failed, and this is a weekly chart. 2 weeks later, we're back in the box. That was an expectation breaker. The market's telling me we're going higher, and it didn't. This is a negative expectation breaker. All right, look, when things don't go the way you think they're supposed to go, those are big moments. Look for expectation breakers as well. I thank you all. I love doing these, and I hope if Ian's looking down, I did justice to his stuff. What a genius. Thank you all. And look, if you're not coming to Orange County and you sign up for the online, you'll get the videos, you'll get the PowerPoints. I really would like to have a strong showing because of my outside speakers. Y'all have a great rest of Memorial Day. Thanks, everybody. And on that note, I'm going to stop the recordings.